because instead of buying American beef, China is now buying beef from Australia. Same thing, you saw there's been a love fest with Mark Carney, the Prime Minister of Canada. Why? Because instead of buying American oil, China is now buying oil from Canada. So basically, everything that the United States, except for ethane, sells to the Chinese can make on their own or buy from other countries. So that's kind of a long-winded answer, but I think it's important because strategically, so many investors, so many, political analysts, and then the White House itself completely misread all the cards that China has. And I've been saying this since literally the day of Liberation Day. I've been going on TV saying this was not going to be a win at all for America. And I think I've been proven right with the mini detente that took place in South Korea last week between Trump and Xi.
Hey everyone, and welcome to another episode of the WTFinance podcast. On this episode, I have the pleasure of welcoming on Shaun Rein. So Shaun is the founder and managing director of China Market Research Group, the world's leading strategic market intelligence firm focused on China. He's also the author of the recently released book, The Split. So Shaun, thanks so much for coming back on the podcast.
It's great to be here, Anthony. Thank you for having me. It's an important time for your listeners to know what's really happening on the ground in China, whether or not China is uninvestable, as many of the top hedge fund managers thought at the beginning of 2025, erroneously, as China has now become the second best performing stock market in the world in 2025. It's too bad that we didn't have this conversation in January because I turned very bullish on China 9-10 months ago.
Yeah, really interesting. Interesting. Get into it. So it'd be, if you could maybe just lay the groundwork. So what actually is happening in China? Because as you said, a lot of our listeners, based in the US, based in the UK, all over the basically mostly in the Western world, don't really get that exposure.
I think the first thing, and this is really important, Anthony, is the trade war. When you listen to Scotty Bessent, the U.S. Treasury Secretary, he has said ever since Liberation Day that America has the upper hand in the trade war because America buys so much of China's goods. So I think there's a couple things or myths that we need to sort of break down here to understand why Scotty Bessent is completely wrong, has misled Donald Trump down a very dangerous path when it comes to the trade war with China, because China clearly, if you understand the economy, you understand the levers that are pushing the economy, it's very clear to those of us that China has always had the cards, always has the upper hand, and is winning. And that's why, even though the economy, let's be honest, is still fairly weak and soft right now, it's still going to continue to grow. And it's a place that multinationals and certainly investors need to think whether or not you should gain more exposure to the China market. I usually tell retail investors they should put 15 to 20% of their portfolio in a China-focused goods. Now, why does China have the upper hand in the trade war? So a couple things. One, China is not an export-oriented economy anymore. Instead of being about 40% towards exports, like it might have been when China entered the WTO in the early 2000s, it's more down around 20%. That's number one, Anthony. Number two, actual exports to America is fairly low. Over the last 7 years, since Trump launched the trade war on China, China's actually de-risked from the US. So let me give you some numbers. In 2017, 17% of China's exports went to the United States. That number is down to only about 12% right now. ASEAN actually accounts for 18%. So China has de-risked from the US. Overall, exports to America only account for about 2.5% of GDP. So Scotty Bessent was wrong to think that A, China's an export-oriented economy, and B, he sort of over-exaggerated how important exports to the United States was for the remaining part of China's export-oriented economy. Second, and here's the thing, Anthony, I mean, you're from Australia. What has Australia and China been doing in the last couple of weeks? It's been like a love fest between Albanese, the Prime Minister in Australia, and China, because instead of buying American beef, China is now buying beef from Australia. Same thing, you saw there's been a love fest with Mark Carney, the Prime Minister of Canada. Why? Because instead of buying American oil, China is now buying oil from Canada. So basically, everything that the United States, except for ethane, sells to the Chinese can make on their own or buy from other countries. So that's kind of a long-winded answer, but I think it's important because strategically, so many investors, so many, political analysts, and then the White House itself completely misread all the cards that China has. And I've been saying this since literally the day of Liberation Day. I've been going on TV saying this was not going to be a win at all for America. And I think I've been proven right with the mini detente that took place in South Korea last week between Trump and Xi.
Yeah, I'm interested in, what impact would, I guess, a second order, tariffs potentially have? Because if you look at it, or maybe not even tariffs, but like pressure on allies, because that seems to be what's happening. That not only is the US looking to put tariffs on China, but they're looking to force their allies to then put further tariffs on China as well. So I guess if that were the case, if it were to sort of permeate throughout the Western alliance, that could be quite bad for China.
Yeah, two things on this. One, I think we were in China, people are a lot more worried about Biden or Kamala Harris because Biden, was very good at working with allies, the French, the Germans, the British, the Canadians, the Australians, to try to contain China's economic growth and destabilize the CPC. I think politically during the Biden regime time, China was really depressed and anxious. Consumers were, businesses were, nobody wanted to invest in a new company because they worried if they built a company and it got big, like a Huawei, like a Shine, like a Temu, the Americans under Biden and her allies would try to stop that growth and say it's a national security threat, throw it out of the country, do all types of really economic coercion to stop China from growing. But because Trump made a fundamental mistake by going after every single country in the world with tariffs, it's made the rest of the world say, can we trust the United States right now? Right? I mean, you look at it. Canada is is the closest ally of the United States. Canada certainly is not threatening America. Certainly isn't doing anything evil to the United States. But Trump has huge tariffs on them and is talking about election interference because of Doug Ford from Ontario putting in the anti-tariff ads quoting Ronald Reagan. So what's happened, Anthony, is the whole world is saying we can't trust the United States right now. We need to pivot, de-risk from the US, and start to get more economic trade with China. And that's especially true in the global South, or I like to prefer to call it the global majority. I was recently in Saudi Arabia. You see Alibaba, you see Huawei businesses there. BYD, which is a major NEV maker, has actually replaced BMW and Toyota as the largest seller of autos in Singapore. So you're seeing the whole world is now saying, let's move closer to China. If Scotty Bessent and Howie Lutnick had talked to Trump and convinced him only to put the major tariffs on China, it would have been crushing for China. All these factories would have flown out to Cambodia or Vietnam or India. But here's the interesting part, Anthony. I've spoken to about 10 factory heads in the last week, and a lot of them complained to me. They said, you know what, Shaun, we moved because of what Biden and Trump said they wanted to do. We moved our supply chains to India, Vietnam, Cambodia, and other countries out of China. But now here's the thing. There's lower tariffs on Chinese produced goods than on Indian produced goods. So one of the concerns I have for the whole global economy, Anthony, is everybody doesn't know where to invest or what to do because you don't know what Trump's going to do today. His mind might change, in 30 seconds. He's like a cat chasing after a yarn ball. Like nobody knows what's going to happen. So what companies are doing is they're saying, you know what, let's not invest. We're not going to invest in China. We're not going to invest in India. We're not even going to invest in our home countries because we just don't know what Trump is going to do. And that's why I think you've seen so many companies, to ensure their profits and ensure their sustainability, are firing people. So in the last week, you saw Amazon fire 20,000 people, UPS fire tens of thousands. I think there's going to, IBM, I think you're going to see a lot of layoffs, which they're going to attribute to AI. Part of it is to AI, but a bigger part is the completely chaotic, uneven economic policy making that's coming out of DC that's causing chaos in boardrooms throughout the entire world.
Yeah, and I guess a challenge with if they were to come out directly at China, it would basically be, an act of war. It would potentially be an act of, I don't know if it leads to something, like a actual war. But then it would then lead the nuclear option in China, for example, the rare earths that they've done recently, and other of these massive things that they'd be able to cut off. So I guess that's why they maybe try to say, oh, we're targeting everyone, not just China, even though China seems to have been the number one target.
Possibly. But I think, the reality is China and the US have almost been at war in the last 7 years, right? I mean, you talk about economic sanctions, technology sanctions, you talk about export controls. This is really hurting everyday Chinese. I'm American. I'm a red-blooded American. I love the United States, but I've been living in China for 28 of my 48 years. And I've seen, and I've been very sad at how depressed and anxious Chinese consumers are right now because they felt that the United States was going to contain them the way the US has really hurt generations of North Koreans, Iranians, and Cubans, really because they exist and are run under a different political system. I don't think that Trump was trying to say to the world, we're going to not have huge tension with China and only put tariffs just on China. I think he was basically trying to bully the entire world to grab power. I think I'm not a psychologist, but I think narcissism is at play. And I also think, you have the situation where America was at 35 trillion in debt when he came on board. It's now 37 trillion. I think that Trump was trying to put the tariffs on to try to reduce the debt without calling it taxes on the American people, because politically that's not something that Americans like. And a large part of the electorate is still stupid and doesn't understand that for the most part, it's the American consumer that pays tariffs, not the Chinese manufacturers. The second thing is, I think this was a way that Trump wanted to force other nations to buy treasury bills in order to lower the interest rates on American debt. Now, I think what he didn't realize was that he didn't have, again, because of Scotty Bessent's underestimation of the Chinese, they didn't understand that more countries would not be bullied into buying more T-bills because they saw, wait a minute, we've got a way out by going closer to the Chinese. So you have to look at it. The Chinese, went from 1.4 trillion down to 750 billion US in T-bill holdings since Trump's first term. So again, China has been de-risking from the United States. And so I think you see a lot of other countries are starting to do the same. So the US has weakened since Trump has been in charge, while holdings in gold has really soared because more governments and more investors want to hold gold because they're just scared of what's happening in the United States right now. So I think it's just, look, Scotty Bessent has failed twice as a hedge fund manager. I used to advise him on his China strategy. He's not very good at geopolitics. So I think it's a real mistake for him to be in that position advising Trump, because he's leading the US down a very dangerous, dangerous road economically.
Yeah, it's really interesting. I think, if we go back, maybe take a step back, China was added to the WTO in 2001, has really taken advantage of that and has become a manufacturing powerhouse of the world. There was talk that they did take advantage, I guess, of deindustrial, or they sort of caused the deindustrialization of sort of Western countries. And then there was also the challenge that they, basically stole IP and then didn't go through the arbitration in the WTO as agreed. Is that true, or how do you see those sort of allegations?
Yeah, so China stole 5G from the United States, which is why China has 5G and America doesn't. I mean, a lot of these, criticisms or allegations against China are ridiculous. Now, I mean, let's be honest, 25 years ago, there was some IP issues, but that was really not so much driven by the state, but driven by individual people. When I first moved to China, a lot of Chinese couldn't eat meat. People tell me that they would eat meat once every month or two. So for a lot of Chinese families, you had the situation of, do we eat meat and put food on the table for our children, or do we spend money on a computer and getting access to Microsoft Windows and Microsoft Office? So I think in those days, sure, I don't think it's a moral issue. I think that a lot of Chinese use pirated software simply because they couldn't afford the expensive American technology. Now it's really hard to find pirated software in China. So the government has cracked down on that. So I think the allegations of IP come from some reality 25 years ago, but the reality has changed dramatically in the last 10, 15 years. And that's really just the red herring. Now, as for stealing jobs, that's ridiculous. Look, here's the thing. A lot of these American companies, right? If you look at a Nike, you look at an Apple, they wanted to make profits for their shareholders. They wanted to make money for the hedge fund investors and the mutual funds, the capitals of the world. So in order to make more money, they moved their manufacturing to China and they saved a lot of money. Now, for China and Chinese, it was a good thing because at the time, like I said, people could barely eat meat. So even if they're making $200 a month, toiling away in a factory, making the type of products that all of us love, iPhones, Nike, Air shoes, this was a win-win situation for both countries. So to say that China stole jobs is absolutely ridiculous. If you're going to blame anyone, blame Steve Jobs, blame Tim Cook, blame Phil Knight, blame David Perdue, who ran Reebok and moved all of the manufacturing for Reebok to China. He's now Trump's ambassador to China, and he's criticizing China for stealing jobs. So there's a lot of hypocrisy and misdirected anger. Now, China, frankly, just has a far better ecosystem. They are not winning on low cost. I mean, it's cheaper to produce something in India. It's cheaper to produce something in Cambodia when it comes to wage levels. But the reality is China has not just a well-educated, well-trained labor pool, but they have the infrastructure, they have the ports, they have the subways, they have the trains that enable great shipment of products. So China is winning not because it stole jobs, but because it invested smartly into what is needed to create a manufacturing ecosystem. I don't think the rest of the world fully appreciates how strong and powerful China is going to be over the next 10, 20 years when it comes to manufacturing. I was just in Brussels and I was meeting with a Serbian businessman, and he told me he used to buy all of his machinery from Germany for 90,000 euros. He said he's now switched and is buying it from a Chinese supplier for 30,000 euros, and the quality is as good, if not better, from the Chinese side. So I think, you're going to see Europe especially is going to get smashed. I think, the Nordic countries, Germany especially, anything that they're good at making, the Chinese can make better, not because they stole jobs, but because they invested in that manufacturing ecosystem, and over the last 10 years have gotten quite good at innovation. I'm quite worried about Europe right now, Anthony, because they're being outcompeted by China, don't realize it, and especially Germany and the Dutch actually are taking a very aggressive militant view towards China, which is not well appreciated by Chinese.
Yeah, definitely. They are very slow, I guess, to shift as well. Um, is there the consumption around the world to sort of take up this demand? Because I guess the challenge as well is it's not a challenge, but it's they have it. Most of this production has been government subsidized, I guess, through government backed banks and loans, and it's been a volume at all costs, innovation at all costs. But it does have to get to the point where you can't keep just growing and growing and growing. You have to sort of consolidate it and focus on margins. So do you see that coming through?
Sure, that's a good point, Anthony. But one thing, when you talk about all the subsidies, I mean, a lot of other nations criticize China for subsidies. Elon Musk and Tesla wouldn't exist if there weren't subsidies in the United States. The entire semiconductor sector in America wouldn't exist right now if there wasn't the CHIPS Act from the US. Detroit, GM, was bailed out by the Americans in 2008. So I think there's a lot of hypocrisy and double standards and false narratives when the Western world criticizes China for subsidies. They do the exact same thing that we do. That's number one. Now, number two, when you're talking about overcapacity and cutthroat competition, yeah, that's definitely a problem. For instance, in China, the local domestic Chinese market can probably only absorb about 20, 25 million cars a year, but Chinese factories can produce 40 million a year. So I don't want to call it overcapacity. That's making it sound like the Chinese are doing something evil. It's more that they are building up capacity and they want to export. People never called the Americans evil for wanting to export NVIDIA. People never called the Germans evil for wanting to export Siemens or BMW. So it's only when Japan wanted to export in the 1980s, and now when the Chinese want to export, that the Western world calls these two nations evil. Again, there's a lot of double narratives, a lot of hypocrisy there. I think what's more concerning from the ability or the capacity to produce is what you have is called involution. So because of the weak economy here, there's a lot of deflationary pressure. Because there's so much capacity, there is also more deflationary pressure. So prices and margins are cutthroat. So the government is trying to do an anti-involution policies, and they're doing nothing. It's hard to make anything big, but they're doing a lot of incremental pushing, and that's actually helping. You saw industrial profits last month went up 21.6% in China. So I think we're at the start where you're seeing there's definitely still pressure on deflation, but you're starting to see margins are going to get a little bit better for Chinese companies, which is why I typically recommend, again, that retail investors get 15 to 20% of their overall holdings to be exposed to China. Probably if you're a professional investor and really focused hard day to day, you're probably looking 20, 25%.
Okay, so yeah, you mentioned that they've had amazing year. They've sort of second best performing market globally. So you still think there's more to potentially run currently?
I do think there's more to run. I mean, this might get a little controversial, but I'm actually, I'm very worried about the United States. I'm worried about stagflation. I spent 2 months in the US this summer. This was the longest I had been in the US in 25 years. And I was shocked at how poor and how hurt so many everyday Americans were. I interviewed a lot of people. One was a teacher at a school, and she also worked as a security guard at night and also drove Uber. I talked to another person who worked for a big airline company at the airport and also drove Uber every morning and at night. I met a guy who was a security guard at a school who also did security on weekends. At bars and music events. I've heard numbers, I don't know if it's true, that 30-40% of Americans are part of the gig economy right now because their first-time jobs don't help enough. So I think we've got a real problem where the bottom half in the United States are really struggling. You've got a situation where big multinationals, because of the political chaos in the Trump administration, are not willing to hire and are not willing to make investments. And then you have the situation where you have AI is going to replace a lot of employees and a lot of workers. So I think I'm worried about stagflation. Just overall, that's going to be something that America might have to deal with because there's still inflation. I think we're running into a recession. That's one part. Second, I mean, look, I am nothing compared to someone like Warren Buffett. But Warren Buffett is sitting on a 361 billion US dollar cash holdings right now. He's the oracle. He sees way more than I do. He sees more than you do. He sees more than what anyone else does. And it's clear he's getting concerned about the valuations. 50% of GDP growth for the US this year is from AI, and it's just a circular thing where, NVIDIA is selling to this company who's buying back from NVIDIA. It just doesn't really make a lot of sense to me right now what's happening. So I would recommend to companies to de-risk from the US and reallocate towards other markets like China, where the economic fundamentals are more sound and you have a much safer, stronger, saner political situation.
Yeah, and if we stay in the US, do you think there's a way out of it? Do you see, is it something that we can just sort of slowly, be, I guess, pushed through the system and then sort of rebound? Or do you see this more as a secular shift that we've seen over the past few decades?
I think, America, I would never bet against America mid long term. I think that they are on the way down and China will be the next global superpower. But I think America has a lot of great things going for it. It's got a very great, innovative workforce. They've got a lot of capital floating around. I think the big problem right now is Trump, and I'm not an anti-Trumper. I actually like a lot of his policies. I actually like I actually like more of his policies than I do Biden's policies. But I just think his behavior is appalling, and the lack of dignity and presidentialness and changing from one minute to another. is just causing a lot of fear, again, in boardrooms so that nobody's able to make an investment. If you are a hedge fund, you can put money into the equity markets and sell out in a second. So for equity guys, they're really excited right now because of all the chaos, and I'm sure there's a lot of insider trading going on right now. I have no proof of that. But I think if you're an investor, you can go in and out very quickly. But if you are a multinational that's investing, over a 5-10 year period, there's just too much uncertainty and chaos with what's going on. It's just not, the fundamentals aren't there from a political standpoint. So again, I actually like a lot of Trump's policies, but it's his lack of dignity, and it's spread down throughout his entire group of people. You see Carolyn Levitt, the spokesperson, says your mother when somebody was asking why they chose Hungary for that potential meeting between Trump and Putin. You see Stephen Chung, who's the director of communications. All of these guys and ladies in the Trump regime are mimicking or copying his bad behavior. And it's just adding to polarization and chaos in boardrooms because nobody knows what to do right now. And I think the reality is when you talk to senior executives, they agree with me. They're scared. They don't know what to do. They don't like what's happening, but they're too scared to say this vocally because they're worried that Trump is going to slam them on Truth Social.
It is amazing. So how do you see this trade, I guess, war finishing? Is there a solution? Do you think it's going to be where, there's going to be lots of bluster and then we slowly end up in this sort of slow disintegration or disconnection between the sort of two countries? Or what do you think?
I think under Trump, I'm actually hopeful that the U.S.-China relations can be better, which is why I'm bullish on the economy. I don't think Trump is an ideologue. One of the concerns I had with Biden was that for him, it was liberal democracies versus communism. It was American-led world order and imperialism versus China. I think that under the Biden regime, there is no way of making a deal, no way of coming to a detente. I don't think Biden necessarily wanted a war with China, but he wanted to destabilize China and maybe cause China to implode or to really put a new iron curtain around it. I don't think Trump is like that. I think he's transactional. He's looking out for his benefit and the benefit of his family. And so he's really, I don't think wants war. I don't think he is going to ratchet up the pressure to the point that war happens. What I do think he does is he likes to employ a shock and awe strategy to sort of scare everyone. He lets his minions like Scotty Besson or Howie Lutnick or Peter Navarro or Marco Rubio go out and scream and threaten and try to scare everyone. At the end of the day, if you push back and you hold back, then you win. If you're weak and meek, you lose. I mean, you look at Modi right now with India. Modi has been a reasonably strong partner, not a super strong partner, but a reasonably strong partner of the United States for the last 10 years. And they've slapped 50% tariffs on India. I mean, that's ridiculous. India is certainly not a threat. India is not stealing IP. India is not stealing jobs. All of the red herrings, but all of the attacks and allegations on China, India is not doing. Yet they have 50% tariffs on India. So I think Trump just bullies and pressures to try to extract as much as he possibly can for himself. But at the end of the day, does not want to contain China and does not want a full-fledged war in China. And that's why you're starting to see in China green shoots of optimism. The venture capital guys, the private equity guys, they're all coming back. I've been very busy. In the last couple of weeks, I've done keynotes for South African hedge fund, a British hedge fund, Australian hedge funds. I just signed a deal yesterday, actually, to do one for a Swiss hedge fund. So you're starting to see all of these global investors are saying, you know what? China's investable again. Let's go back. They haven't been here in years. Let's talk to people like Shaun. Let's read Shaun's book, The Split. Sorry, I had to throw that in there. And want to know, should they be investing in China again? And if so, what sectors, what companies? I think Trump is going to allow that. I'm actually quite positive on things. Again, Trump blusters. It's all part of his shock and awe strategy. But at the end of the day, he will back down because he's not an ideologue or a warmonger like Joe Biden was. I wouldn't shake Joe Biden's hand. I would be willing to be Secretary of State for Donald Trump.
Yeah, great message. And if we sort of step back, you said that you wouldn't bet against the US. I'm guessing you wouldn't bet against China. Is this the end of the US empire and sort of the emergence of the Chinese, polar worlds, or how are you seeing that?
I think we're
Or could be both?
definitely at the stage of the end of American hegemony and the American empire as it's been the last, since the end of World War II. But I don't think America is going to go away. They're still going to be very powerful for the next 20 to 50 years, at least, certainly in my lifetime. But you're getting rid of the unipolar world that arose after the end of the Soviet bloc in '89. And I think that's healthy. I believe in multipolar worlds. I love China. I've been here for 28 years. I think the Chinese government, I have some criticisms of it, but I think net, they've been an overall positive by far for the Chinese people. And I think that they will be a net positive for the world. But I wouldn't want there to be a Chinese unipolar world, just like I wouldn't want there to be an American unipolar world. I think that you should have multipolar. I think that keeps checks and balances. I would love to see America be strong. I'd love to see China be strong. I think and hope that India will be strong too. Their GDP per capita is only a fifth that of China, but if they continue to grow and are smart, they will be the next major global power. I'd like to see Europe to sort of shake itself out of its warmongering idiocy and get rid of all the red tape and bureaucracy that's stifling innovation. The big winner of the US-China trade war should be Europe. They should play the Americans off the Chinese and play the Chinese off the Americans and benefit. But, Ursula von der Leyen, Merz, Macron, they're basically shooting Europe in the foot by not taking a pragmatic approach to policymaking and the economy. You have too long holidays in Europe, short work days. It's impossible to fire people. And then crazily to me is Europe is basically vassalized itself to the United States. You hear that Merz and Macron are refusing to meet with Latin American and Caribbean leaders because they're scared of upsetting Trump. I mean, that's ridiculous. They need to get some mettle. You got to remember, in 2008, 2009, Europe's economy was larger than America's. Now it's 40% that of America's. So clearly what the Europeans are doing is wrong. But I am hopeful for a multipolar world. The big risk, Anthony, is that America doesn't graciously cede its positioning and power. If America is gracious to China's rise, gracious to India's rise, is okay with Europe not being a vassal, then I think the world is going to be stronger economically and more peaceful. If, unfortunately, the United States decides to lash out and try to enforce the US world order, then war could start. I don't see that happening with Trump right now, which again is why I like his policies more than I liked with Biden. But I was very scared about a Biden, Kamala Harris, Mike Waltz type of administration after administration after administration, because you see what's happened in Ukraine. You've seen the economic and life devastation to the Ukrainians, but also to the Europeans. And that I blame not all on the United States and NATO, but a large part. I mean, obviously, I disagree with Putin killing people and invading, but a lot of the blood is on Biden's hands, frankly.
Shaun, thanks so much for your time today. We sort of covered so many different parts of, I guess, the relationship, the trade war, geopolitics, what this could look like in the future. But my last question is, what is one message you want people to take away from our conversation?
Thanks so much for having me, Anthony. It's great, with technology that you're able to bring someone like me in, somebody who lives in China and is on the ground. So thank you for that. I've been banned formally from doing TV from Bloomberg and from Wall Street Journal. So it's great that podcasts are the new truth about what's happening in the world, and you can bring in different ideas and different views and guests like me. But what I would say to your audience, especially those of you in Europe and Southeast Asia and Australia, if you don't believe me, totally fine. If you read my book and don't believe me, totally fine. Come to China. Come to China. China has gone visa free for most of Europe and Australia and Southeast Asia. Unfortunately, not for the UK, Canada, and America. But for a lot of your listeners, you can get on a plane, you can fly to China today, look around with your own eyes, get information from different sources, and you just can't believe mainstream media. Again, Bloomberg, to their shame, has banned me. And I don't know why. So thank you for having me. Please do come visit China and question my own views by going to a Xinjiang, going to a Tibet, interviewing Chinese, and see, is Shaun Rein lying? Because I can probably guarantee you 90% of you will come away and say, Shaun Rein is right. Let's invest in China again.
Perfect. Great message. So if anyone wanted to find out more about your work and what you do, where would the best place for that be?
Well, the best thing to do is read my book, The Split, Finding the Opportunities in China's Economy and the New World Order. It just came out in the UK earlier this year. My publisher is Hachette UK. That's another thing. All the British publications wanted to publish me. The American ones didn't. So that shows that the British are a little bit more open. But read my book. It's available at Waterstones and Amazon around and in bookstores around the world. And you can follow me on Twitter and LinkedIn. And in Twitter, I've been told that I'm a little bit more controversial and aggressive. And so when people meet me in person, they're surprised and they say, actually, you're a really nice person. So I look forward to keeping in touch, Anthony, and look forward to keeping in touch with all of your audience members.
Yeah, great. Perfect. I'll put that description below. But yeah, thanks so much for coming on. Again, really appreciate it. Hey, everyone. Thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that. But it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching and see you on the next show. And you also might like this video right here. All right. Thanks again.